In today's video, we're going to be talking about the PPI number, or the Producer Price Index, and how this can be a very useful tool for fundamental traders to understand the inflation story that's in front of us and how it might impact the charts that you're trading. So let's go ahead and jump in. Welcome back to the channel, guys. I do want to just say, if you're new here and you're trying to get better at fundamental analysis, take a second to make sure to subscribe to the channel down below and give this video a thumbs up if this sort of stuff helps you. It'll tell the YouTube algorithm you want to learn more about this topic. So let's go ahead and jump into this Producer Price Index thing. What is it all about and how can it actually help you as a trader? It's something I've been using for a long time to keep an eye on inflation, as pretty much every other economist or person looking at the fundamental side of trading does consider this. It's a really important and actually leading indicator of inflation. So let's get into it. So first of all, it stands for, like I said, the Producer Price Index, and the answer is kind of in the name. It reflects the change of finished goods and services sold by producers. Now, of course, this is not like your, when you go to the mall or to the grocery store and it's sitting on the shelf. Not talking about that, but before then, like up the supply chain, during that phase, these are your producers who are wholesale pricing. This is another way a lot of people call it the instead of the Producer Price Index, they'll call it like wholesale pricing, or like wholesale producer, what they're basically charging up the supply chain. And so what does this actually matter? Like, why is this important to us as fundamental traders? Well, again, it can actually be a lead indicator of what everybody always talks about, which is the big one, CPI or PCE numbers. These are other measurements of inflation. And the Producer Price Index can actually give us a nice little overview of what up the chain inflation is looking like, as oftentimes what we see is that this actually means, when you see Producer Price Index higher, it often means that it's going to get passed on to the end buyer or the consumer. Think about it, for example, if you are talking about, let's just say, a loaf of bread. Up the supply chain, before the grocery store sells it to you and I, up at the supply line, where they're producing bread and that sort of thing, they're wholesale selling it to grocery stores who then, truck it out to their different locations and sell it to you and I. Well, if they raise their prices, if the wholesaler that delivers the bread or provides the bread, if they raise their prices, guess what? The grocery store also raises their prices, and they've been doing that a lot lately. I don't know if you've been noticing, but they do that a lot recently, as of course the Producer Price Index has also shown some inflation in recent years. The same thing with the Consumer Price Index, which is the CPI. And by the way, if you do want to learn about the Consumer Price Index, we've already got a video on that topic. It's at the top right hand of your screen if you would like to learn more about CPI. Back on topic here though, again, if they raise their prices, the producer that is, then the grocery store is going to pass on those prices to the consumer so that they're still making their profit within, right? If the producer raises their prices, so does the sort of retailer or the end seller to the consumer. So you also need to know, when is this actually reported, and how can I find out the data where can I watch for this data? Well, first of all, we do have a software called the A1 Edge Finder. It's on our website. You can find all sorts of fundamental data, and I'll leave a link down below in the description if you'd like to get a trial of that software. Information will be found down below. But in terms of when it reports once a month, usually around the middle of the month. So always keep an eye on your economic calendars, as this number will usually come out in the morning, usually 8:30 a.m. US Eastern Time. So let's get on to the fun part, which is, how does this number really impact our charts? If you're somebody who trades gold or currency pairs, or you trade indices, how does the Producer Price Index impact your charts? Well, let's get into it. So here's the basic rundown, and this is basic, and there should be some asterisks next to this because there's some other factors at play here, and I'll talk a little bit about that in just a second. So generally speaking, a hot read in the PPI, right, the Producer Price Index, if that is a hot read relative to what people thought it was going to be, meaning there was some inflation there, usually what happens is we usually see a stronger US dollar, and of course PPI in other countries would obviously impact their currency. So if you see higher PPI in Australia, that could be a positive thing for their currency, etc. And it's also usually bullish for stocks, but there is some asterisks next to this. And why is that? Well, we'll get into that in just a second. But first of all, the currency part. Why is the USD strong on a higher PPI reading? Why is inflation positive for currencies? Well, it's because what it usually means is that hot inflation could lead a central bank to take monetary tightening policies, which restricts the money supply, which makes less dollars. Less dollars means more value per dollar, that sort of concept. The point is, a hotter inflation read could alert the central bank of a respective country to maybe do some monetary policy tightening. This is, of course, not the only thing that they're looking at. They're also looking at the consumer price index and PCE, but this is a read of inflation. And if they see a lot of hot inflation, it may cause interest rates to go up, hold higher at longer, that sort of thing. And what you also need to know about stocks, why would this be bullish for stocks? Well, there's some times where it wouldn't actually be bullish for stocks, and that's why, again, we should put a little asterisk next to this. Why is it bullish for stocks, generally speaking? Well, it's because if you're seeing, prices getting raised, it's because there's a lot of demand and a lot of, stuff going on that's stimulating the economy. Clearly, there's some spending going on to get this inflation to go up, right? Why could it be and sometimes not bullish for stocks? Here's why. If this is true, where we see a real hot read and we could actually see the central bank take quicker or more aggressive monetary policy, that could actually be pessimistic or bearish for stocks. But in most market regimes, most market environments, a good PPI read is going to be strong for the stock market and for companies in general. The big caveat is whether or not the central bank is looking to raise interest rates on any sign of hot inflation. If that is sort of a threat looming, it will usually be bearish or pessimistic for stocks. As of course, rising interest rates, generally speaking, hurt businesses since borrowing becomes more expensive. Well, what about gold? What does a hot read in a PPI reading do for gold? Well, it's actually kind of bearish. And the reason for that is because it shows it is sort of a sign usually of a strong economy. If you're getting prices going up, that's usually because, there's a lot of spending going on, as I mentioned. Strong economy usually doesn't do well with gold, right? It's actually usually a bearish factor because, of course, like we said, this increases the strength of the dollar. Stronger dollar, weaker gold usually is the case. But what about a cool read? We'll flip it around and say, well, what if things are, not as hot as expected in terms of inflation reads through the producer price index? Well, we kind of flip everything around. We say, well, in this case, this is going to be weak for the US dollar 9 times out of 10. Why? Because again, that would show a, perhaps a slowing or declining economy. The prices aren't being raised because maybe there's a lack of demand somewhere in there, right? So that's usually weaker for the US dollar. It could even mean, in terms of looking at it from a central bank and interest rates decision, cooling inflation could lead to rate cuts to stimulate the economy at some point, which is also bearish for the dollar for the reverse reason that we just listed everything else out. So if we take a look also at stocks, what about stocks in this case? Well, again, there's kind of an asterisk here because if PPI is cooler than expected and the central bank is already sort of, they've got, a tight monetary policy, a cooling number in PPI could actually cause, some relief for the stock market as they say, well, hey, maybe the central bank's going to cut rates, and that's generally speaking usually positive for stocks. But again, in most cases, lack of demand is not great for stocks. It kind of depends the market environment that you're in. That's why fundamentals are really important to actually truly understand, not just try and read a print and be like, oh, I know what's going to happen now, right? It's a little bit more than that. You got to understand the story pretty well in order to actually trade upon it. Next up is gold. How does this impact it? Well, it's usually going to be a positive thing. 9 times out of 10, this would just be positive because again, this would cause a weaker dollar, and a weaker dollar could be strong for gold. Now we get on to how I personally use it. So I've traded with fundamentals for years now. It's a core component to my trading approach. And I think that, as I mentioned just a moment ago, you kind of need to fully understand the story in order to really capitalize on understanding fundamentals. Here's the thing. If I see a hot read or a cool read, pretty much as we just went through, I'm looking at that as a read on inflation. However, it's not the only thing that I look at. And I mentioned this earlier. This is sort of a confluence tool. Many traders are familiar with the idea of confluence in technicals, but it also does exist in fundamentals. If you see PCE numbers and CPI numbers and PPI numbers all kind of higher than what was expected and strong high reads, that could be really dollar bullish in the short term or even in the midterm. And so kind of understanding that can be really important. If you're getting mixed reads, PCE and PPI and CPI, if they're kind of showing different signals, perhaps it's not as clear cut as to what inflation is really looking like. This is why it is key to kind of keep your eye on all of the main key components when it comes to trying to track and understand inflation. I do want to invite you also, if you have not already, checked out our free Telegram channel. There's a link down below in the description. And as I mentioned earlier, make sure to go check out that video on CPI. If you have already sort of feel like you're good with a PPI, let's move on to CPI in case you haven't seen that video already. We'll again leave that link in the description and in the top right. Thanks, guys. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.